Bank Indonesia will bring in steps to tighten monetary policy if the government does not speed up the process of structural reform ahead of an expected interest rate hike by the U.S. Federal Reserve next year. BI says there has to be concrete efforts from the government to improve Indonesia's economic fundamentals. In anticipation of interest rates rising in America, Indonesia's central bank will be taking action on monetary and macro-prudential policy, as well as the balance of payments. However, the effect of those instruments are limited and will have to be complemented with a mixture of real sector and fiscal policy. BI says structural reforms are necessary because the Fed will likely increase interest rates more than 100 basis points in the first semester of 2015. An increase in the Fed's funds rate combined with lack of investor confidence could spark an outflow of capital from developing countries with weak economic fundamentals.
The debate on whether the Federal Reserve's new bond buying program is the right thing. Former Fed Chairman Paul Bank of America now plans to cut 16,000.
Indonesia is turning out to be a target for U.S. investors in Southeast Asia. The country is still an interesting prospect in their eyes despite significant barriers to business. The American Chamber of Commerce and Industry has released the result of a survey of 588 senior executives of American companies in ASEAN. 81% of respondents said they would expand their operations in Indonesia in the future and said they felt sure they would get many benefits from Indonesia next year. The survey also showed that many bosses at companies in Indonesia wanted to stay in the country longer. A total of 91% of respondents said they were generally satisfied with their assignment in Indonesia. Of those, 62% also hoped to extend their time working in the country.
Trying to expand its manufacturing business while shrinking its finance unit, where earnings fell.